Well, good morning to you. Happy Thursday. I'm Marlon Bowling with you, your tour guide to the ag commodities. Well, it is Thursday. It is normally when we would have our weekly export sales numbers, but not today because, again, we had a holiday on a Monday, so that means everything is shoved back a day. That means we'll get those export sales numbers tomorrow. We do have Brian Hoops on the line. He is the president of Midwest Market Solutions, and we usually would be talking about those weekly export numbers right now. However, in its place, hey, we did have an overnight export sale, Brian, and I just checked the wire here as I came down to the studio. It was a sale of corn reported overnight, and this time it was a sale to Mexico, a fairly sizable amount, 195,000 tons. So that's nothing to really shake a stick at, but no mention of China, no mention of soybeans this time around. And I get the feeling that traders are getting a little nervous that we're getting to that time of year where we're going to see China kind of shifting away from the U.S. here.
Yeah, I think you're right, Marlon. From the standpoint that we did see a sale here this morning. It was a good sale. About 3 cargoes being sold out of the U.S. to Mexico. Traders starting, as you said, to get a little bit nervous about the crop that's coming out of South America if we're able to get some of this business. But I've heard overnight that Brazil is shipping soybeans into parts of Argentina. There's 3 cargoes bound for Argentina right now, and that is probably going to put a little pressure against our prices in here, as there is such a fear by the end of the month that Brazil is going to undercut our prices and try and dominate some of the export market. We may see some of these previous sale announcements actually be canceled soon.
Well, we're talking a huge quantity of soybeans are going to be produced in Brazil this year, a total record amount, correct?
Right. In fact, overnight, the old Informa group, I think it's Reventive is what they're called now or something like that, they increased their estimates for both corn and soybean production out of Brazil. So they're up to about 154.5 million tons. And even though we're going to see some crop losses sustained in Argentina for both corn and soybeans, we're still looking at a crop size out of South America when you combine Brazil and Argentina, about 920 million bushels or so larger than last year's crop. So that's a lot of crop that's going to come hit the market in February, March, and April timeframe. And we really expect that we're going to see our prices being undercut as a result, because they just don't have storage down south to keep all this crop. They're going to sell it at much cheaper prices. There's been a little bit of harvest, only maybe 2-3% done in northern Brazil, but so far these yields are coming in probably better than expected, the 60s and even some low 70s being reported.
Wow, you stop and think about it, and if you're talking, what did you say, 920 million bushels more than last year? Is that right?
That's right. That's a lot of crop coming.
That's above last year. You think about it, a typical country elevator here in the U.S. probably has storage for what, 1 million, 1.5 million bushels, something like that. I mean, that's like maybe 600 to 700 country elevators that you're adding full of soybeans this year to the supply that we had a year ago. And I don't think people are wrapping their brain around that, how big that really can be. And you're talking like over, 5 billion bushels, you said, on soybeans this year out of Brazil, and we crank out, 2, 3?
It's a lot of crop for the world to absorb, and we're so heavily dependent upon China for taking in this crop. So we'd like to find homes, but I just don't know that we're going to be able to export corn in 2 months or export soybeans in 2 months at $15. I think there's lower prices coming, and the producers that are trying to look ahead and get a handle on this are making sales now. That's what the market is telling you to do. We've really reversed some of these carries to actual inverses in both corn and soybeans at this time. Before the South American crop hits the market, the corn market, if you look at March corn and March soybeans, there's a premium there compared to storing it out for July. The market's telling you we need the crop, we want it, we will pay you for it right now. Don't store it. Don't wait until May, June, July like you normally do, because there it's on the screen, 13-cent premium to sell it today versus storing it to July. And it's the same thing for soybeans. You need to sell your crop now and then take advantage of the futures options markets and re-own it with those strategies.
March corn was down 1 3/4 this morning at 679.5. Now this is before the announcement of the overnight export sale. In soybeans overnight, you had the March contract going down 5.5 cents at 15.19 per bushel. So a weaker tone in the overnight trade. The wheat market in Chicago, you had March down 1.5 pennies. In Kansas City overnight, you had March down 4 3/4 at 8.36 3/4. Minneapolis March was unchanged at 9.01. Now we'll come back in a moment and we'll talk with Brian about our livestock trade here on a Thursday right after this. We're back with Brian Hoops of Midwest Market Solutions. Anything going on yet yesterday on the cash cattle trade, Brian?
Well, there was very little cash trade being done. A little bit in the northern plains. We saw some dress trade coming in. A little bit softer money than I think what we could expect overall. That may be enough to move the market here, but I think you're looking at 255 or 155 bids being passed in the southern plains this morning and yesterday. So feedlots looking for a little bit higher money to develop. We'll see if that happens. Futures kind of did take a step back because the slaughter pace was down yesterday, but I expect it to rebound today. And I think by the end of the week, we'll still be looking at 650,000, maybe 660,000 head kill week, which is really strong and suggests packers will need to buy up for the cattle this week.
On the beef cutouts from yesterday afternoon, I see where the values were down once again. And let's take a look at what we had. The choice cuts were down 258 at 274.08. You look at a week ago and that was 280.73. Select cuts were down 67 cents yesterday. Well, on the futures market, this is how we wrapped up yesterday with our quotes provided by bar chart here. On the live cattle trade, we finished with April 12 higher at 160.22. They really didn't accomplish much yesterday. On the feeder cattle, you had the March 42 higher at 181.72. And yesterday on the lean hogs, we went home with the April down $1.92 at 86.20. May were down $2 as they resumed their downward trajectory once again on the lean hogs. Okay, well, Brian, thanks for all the information this morning. Good to hear from you. And we'll have the weekly export sales numbers tomorrow morning. So I'll cover them at that point. Thanks, Brian. Brian Hoops of Midwest Market Solutions.